Hello traders and welcome to the StrayDogs weekly video. Now these videos are recorded on weekly basis, usually on Saturday, and in these videos I'm comparing DAX with the US markets, usually going through daily and weekly charts. As always, I will start this video with a comparison between DAX index and DAX futures daily. So on these charts there is a bunch of levels and stuff, but the important thing is when we turn off all of these things to observe how strong DAX is. This was Monday and this was the week that we just had. In this week we had trend up day into the new all-time high, trend down day into support and daily 20, followed by yet another all-time high and then down day on Friday. In all of these days, bigger picture was not changed. Still above daily 20 and still above support. Let's go back to these markings here on a push from December. We got here 6 candles grinding on a Bollinger Band on the top side. Then in January 8 candles. Then in February 5 candles, and currently we have 3 candles here. I'm going to compare now this with the S&P and putting the S&P index here. And here we can observe the following. Let's turn off again all of these things. First of all, there is a huge divergence between these markets, DAX as a leading market, while those US markets are now weaker. And what we had here in December, January, February, and now March, now we are having this on S&P on a downside. And as we can see, S&P is below daily 20, below daily 50, and for the 4th day hanging on daily 200. Now this is a very interesting situation here below, because we have this exhaustion move into daily 200, from which market bounced on a first test, which was on Tuesday. Then on Wednesday they got a higher low, bounced again, were hanging there on Thursday. And Thursday, as we can see here, up day on DAX with the new all-time high, while S&P bounced from daily 200. And at the end on Friday, they poked below but closed above. So this was one of the scenarios for us on DAX, because we are using S&P for correlation purposes. And in the morning notes for Friday, in this upper part, which is dealing with information about context and large time frames, that main point on the charts which were given for the US markets was that S&P was at daily 200 for the 3rd day in a row, and Friday was 4th day. That scenarios there are simple. Either they are going to hold on daily 200 and up, which can be with a spike below then regaining. So that's exactly what happened here. Spike below then regaining. That's a usual maneuver, like a look below and fail. Up they go, which would give a boost to DAX, which is already strong on its own. And that's exactly what happened in the afternoon session on DAX, which was going down but then up with the US markets. While this is second scenario, breakdowns below daily 200. When I say breakdowns, I think about breakdowns of daily 200 on S&P and on Nasdaq, which would open more downside. And those scenarios are still the same for the future. So if we compare now here S&P with Nasdaq, so left side is S&P and the right side is Nasdaq with the usual industry standard moving averages. This blue one is a daily 50, red one is daily 200. This thin line as a midpoint of Bollinger Band is daily 20. We can see how these markets are divergent from DAX, and we can also see that between when market goes in a space between daily 50 and daily 200, it can take a while for the market to actually decide what's going to happen next. As we can see, this is Nasdaq and it is weaker. It closed under daily 200, and when we observe indices, it is always a good idea to determine which one is stronger, which one is weaker, which one can drag the other one, because we know also that tech sector is the biggest sector in the S&P with more than 30% of the index weighting. So if Nasdaq goes down, it can drag S&P as well. So this is still something to observe. Now I'm zoomed in on a daily chart, and obviously both of these indices are having exhaustion moves. They've been oversold into daily 200, and this is still a thing to observe. When we go a notch higher and to compare indices on a weekly time frame, we're going to get this. So this is DAX here on the left, and this is S&P on the right. While DAX had the breakout of the upsloping channel, and which happened many weeks ago, this week S&P broke this upsloping channel, which is lasting from October 2023. But the close of the weekly candle is suspicious. Now, remember that it bounced from daily 200. I'm sorry. It bounced from daily 200. Let's go back to that daily chart. It used here, you see how they used daily 50 here first as support, then as resistance. Here there were series of marginal higher highs. Both of these are marginal higher highs with bearish divergence regarding to this one. So this is December high, this is January high, this is February high, and both February and January high had bearish divergence with December high. At the end, they went down on a way below daily 50. Daily 50 was used as resistance. So the same can happen if they break down below daily 200 on the way up. Daily 200 could act as resistance like it acted here on Nasdaq. So the question is again, are they going to hold? Is Nasdaq going to regain daily 200 or not? Is S&P going to hold daily 200 or not? Because if they hold daily 200, then we could get a better push to the upside. So short time, just speaking now short time for the next week or two. Back to the weekly chart. So here, why I'm saying suspicious close. So not only that they closed above daily 200 on daily, but on weekly, this is not a decisive close below this candle here, which was January low. When we observe those previous lows, you can also see great divergence with DAX and the S&P. When we compare December low, January low, and some other lows, all DAX was doing was up, while S&P was in range, and at the end it broke below, but look where the close is. So next week, if next week they could regain this level of January low and hold above daily 200 on daily chart, then we could get some up move. Now this is S&P on weekly chart, this is Nasdaq, and as you can see here, this trend line would be trend line from October 2022. So anchor points were October 2022, October 2023, and this here as August 2024 low was the first test. Remember that for trend line you need 2 anchor points. So these are the anchor points to make a trend line. This was the first test. This is the second one. Also, there was a small poke below, but the close above. So this is also something to consider. Other markets, Dow Jones for a long period of time in a range, lower end, famous level 41,860, which was emphasized on my Twitter feed many times before. And this would be Russell, which is the weakest US index. So those are the weekly charts, and for the next week, the main thing on the US markets would be to watch can S&P and Nasdaq hold, Nasdaq to regain daily 200 and S&P to hold above, and therefore those lows from Friday are pretty important. Now about the next week, what are we having next week? The star of the scheduled data is US CPI on Wednesday. That can be a market mover. Nothing much is there on Monday. On Tuesday we have jobs openings from US, and pretty much entire week there is nothing important from the European side. Everything is from the US side. US CPI on Wednesday, PPI on Thursday, and some other data on Friday, but US CPI, most important one. Second thing to consider would be US daylight saving time shift on Sunday, which means that for us in Europe, if we are using Central European time, that means that US markets are not going to open at 3:30 p.m. but at 2:30, 1 hour before, and every single data is obviously shifted 1 hour before. We are used to having those big data like CPI, NFP report, PPI at 2:30 p.m. It's going to be now at 1:30 p.m. And this situation is going to last for 3 weeks until Europeans start to use daylight saving time shift, and that's going to be for Europe 3 weeks later on Sunday, March the 30th. So next 3 weeks for European traders, US close also is going to be 1 hour earlier, open 1 hour earlier. Now about Europe, nothing in the economic calendar, but for DAX, Volkswagen is going to report on Tuesday, March the 11th. BMW is going to report on Friday. Alliance is going to have annual report on Friday as well, but they already had earnings report in February 28th, so I don't think that's going to be a big deal. But Volkswagen and BMW can have impact on DAX. Now, when we observe indices and what kind of companies are having earnings reports, it is always important to understand that a company which has a very low index weighting, whatever that company does on earnings report, it's unlikely to move entire index, right? So when we observe DAX like this, so this is a table with companies, sectors, and weighting. And as we can see here, S&P is almost 17% of a DAX. Siemens is almost 10%, Alliance is 8%, and so on. And then when we observe those auto companies, they on their own are small. Like for example, BMW is only like 1.62% of the index weighting, but it is small on its own, but it's going to likely move all other auto companies. And when you calculate all other auto companies and all other companies which are connected with them, for example, like Continental, which is making auto tires among other things, you're going to get a big influence on a big miss or on a big positive news. So always think about that. If we scroll all the way down, for example, are some of these here companies which are having below 1% of index weighting, are they really capable of moving the market? Probably not, but if they are like in auto sector and they can move then entire sector, then yes, they can then have influence. This here and some other links which can be important for DAX, you can find on my website here at About DAX page, when you can find information about DAX sessions, useful links and abbreviations that I'm using. So when you click here on links, those are those useful links, and component list here is that last one is going to give you this page. Okay, so that would be it about the bigger picture. Long story short, DAX still as the leading index, still strong and likely going to have for the next week neutral or neutral bullish intraday biases, while US markets still have to prove themselves, especially with this situation. Again, S&P left, Nasdaq to the right, and if we compare again DAX with the S&P, this is the thing, that if these markets which are weaker now starting to catch a bid and to have some bounces, it can only give a boost to the ones that are already strong. So DAX is already strong. And if these are which are weaker but bigger markets, much S&P, much bigger market than the DAX. If S&P starts to go higher and especially above this, then it's going to get the boost to DAX. And that is the those lows are the ones that I was talking about. Here, this would be January 14th low, January pullback low. Well, that is this on the S&P. While this here is December pullback low, and December pullback low is this on DAX. So on a daily chart, we already had a divergence here with the higher low versus the lower low, and the same divergences you can spot on smaller time frames nowadays, basically every other day, and those divergences can be very good in practical things in day trading when you spot them on smaller time frames. But I'm going to talk about that in the second video regarding recap for Friday and a review of this week. For the next week, this situation something to observe, and also this here on a weekly chart. That would be it. I wish you a pleasant weekend and good trading.